DSCR Loan Arizona, your real estate investment guide. For investors eyeing the commercial real estate market in Arizona, DSCR loans offer an appealing alternative. If credit score or income verification criteria are constraints, as in conventional mortgages, DSCR loans in Arizona are a good option. Real estate investors in Arizona are increasingly opting for DSCR loans due to its straightforward application process and minimal requirements. They can avoid the complexities of traditional loan applications like providing tax returns and pay stubs. However, before furnishing a DSCR loan in Arizona, it's essential to understand how these loans function, their prerequisites, and the steps to secure them. What is a DSCR loan? The Debt Service Coverage Ratio, DSCR, is a critical financial health metric for properties. It's calculated by comparing the property's net operating income, coverage, to the amount owed, debt. This ratio gives investors insight into a property's ability to generate sufficient cash flow to cover its predicted expenses. These loans assess debt servicing capacity by focusing on the property's income potential rather than the borrower's income, as in conventional mortgages. The focal point is the property's capacity to meet its debt service obligations independently. This includes insurance, property taxes, mortgage payments, associated costs. How to calculate DSCR Loan Arizona. This calculation occurs between the lender and the borrower during the loan approval process. Two fundamental values are taken: the property's net operating income, NOI, total debt servicing value. Adding up the principal, interest, taxes, and insurance, PITI payments, gives us the total debt servicing. Then divide the NOI by the PITI to get the debt service coverage ratio. Benefits of a DSCR loan in Arizona. Lower interest rates. DSCR loans have lower interest rates and terms compared to conventional mortgages. The interest rates can vary widely depending on factors like the property type, loan-to-value ratio, borrower's credit score, DSCR itself. In Arizona, DSCR loan interest rates are slightly lower than the national average. Longer repayment terms. Longer repayment terms allow investors to meet their goals without repayment restraints and stable financial planning. No income verification requirement. The property's NOI sufficiently covers the debt, so the lender does not need to verify your personal income or employment details. Lesser down payment. DSCR loans in Arizona require lower down payments than traditional loans. Tax benefits. The interest paid on a DSCR loan in Arizona is tax deductible, potentially reducing the investor's overall tax liability. Loan amounts. Investors can access generous loan amounts compared to traditional mortgages. The loan amount can range from a minimum of $75,000 to a maximum of $2 million. DSCR loan requirements in Arizona. Investors must satisfy specific DSCR loan qualifications, although the conditions can differ based on the lender, the investor's circumstances, and the type of DSCR loan. Credit score. A strong credit score proves the borrower's ability to manage their debt responsibly. Debt-to-income ratio threshold. The debt-to-income ratio is an essential qualification. It indicates the investment's financial health and ability to service debt. Lenders explicitly specify the required ratio. The minimum ratio in Arizona is 125. Cash flow history. Lenders can require borrowers to provide a history of financial statements, usually the previous 2 to 3 years, for the property. Property appraisal. A professional property valuation and appraisal determines the property's current market value. It is to verify that the property provides sufficient collateral before the loan is furnished. Loan-to-value ratio. Loan-to-value ratio, LTV, can be crucial in deciding whether lenders approve your rental investment loan. LTV measures the ratio between the amount of debt used to purchase a property and its value. A general rule is to have LTVs no greater than 80%. LTVs at or below 80% can result in favorable interest terms and percentages for borrowers. Type of property. The type of investment property borrowers wish to acquire a DSCR loan for is essential. Single-family homes, multifamily units, commercial real estate. Some loans may have stricter requirements if the lender perceives the specific property type as risky. Guarantees. Property lenders can require guarantees to establish the debt repayment. Guarantors can be personal or commercial parties. Future projections. Lenders can ask borrowers to demonstrate an ability to maintain their debt service coverage ratio through future business plans. How to get a DSCR loan in Arizona. Complete the loan application with your chosen lender. This includes investment properties appraisal, credit score evaluation, Proving real estate investment experience. Calculate your debt service coverage ratio. Finalize your interest rate. Loan approval. Loan funding. Have a solid business plan. Lenders look for a well-defined investment strategy to prove the investor's ability to maintain their DSCR. It's important to provide a clear, detailed account of how the loan will be utilized to generate healthy cash flow from the property. The projected cash flow must be sustainable and consistently positive. Financial statements. Ensuring organized and detailed documents is key. Financial statements must display higher income and lower debt levels. Types of properties eligible for DSCR loan in Arizona. Properties eligible for a loan in Arizona include commercial and investment properties. These loans are only granted to non-owner-occupied properties. Single-family, 1-4-unit residential investment properties. Multifamily investment properties like duplexes, apartments, etc. Mixed-use residential investment properties. Short-term or vacation rental properties. Example, Airbnb. Commercial properties, retail spaces, office buildings, warehouses, and industrial properties. Finding the right lender for a DSCR loan in Arizona. Every lender has distinct requirements, from fixed rates to adjustable rate mortgages, with their rate structures. Borrowers should find a lender whose requirements and offerings align with their financial goals and investment strategy. Additional considerations for Arizona investors. Make timely payments to ensure your credit score remains strong. Personal credit isn't a key factor, but lenders can review your credit report to determine your credit worthiness and financial stability. Our group of financial advisors at Trust Financial Group can help you snag lucrative properties in Arizona and connect you with the right lender. Contact us today for a consultation.